Good morning, traders, and welcome. It is Monday, May 13th. My name is Charles. This is the Bookmap channel, and we're here to talk about the ES, the NQ, and how it moves through the two-way auction process. You guys are going to have to cut me a little slack. This has been a hectic morning for me. First off, I got a workshop that I'm teaching this afternoon, starting at 11 a.m. And I've had a million emails this morning with questions about things that aren't working for the sign-ins and stuff. Plus, when I tried to sign into my TD Ameritrade account, I found out it's not working because they switched over to Schwab. And when I tried to get that set up, I have to call in. So I didn't have time to deal with that either this morning. So we are flying blind without the market internals on the TD Ameritrade charts that I normally use, but that is just fine. So if you are new to the stream and you don't know the routine, basically I focus on the way the market moves through a two-way auction process. So I look at buyers versus sellers on a minute-by-minute basis. And I make decisions about what I think is going to happen over a longer term based on what I'm seeing on that minute-by-minute basis. Okay? So last week left us with a potential for one of two things to happen. On Friday, the market opened with a gap up, it filled the gap, and then it basically played tug of war right on the previous day's high. So that was neither bullish nor bearish. The fact that we had made higher highs and higher lows was bullish to see, increasing the odds we would continue that momentum this week. But we brought in a lot of volume inside the previous day's range. You could see this was the previous day's range, and we did bring in quite a bit of volume right there on the previous day's high. So what I was waiting to see at the end of the day on Friday was where did the market open this morning after it had had a weekend to kind of absorb that momentum. Well, guess where it's opening? Right back up at the highs. And so that is bullish to see. That increases the odds that the momentum we've been seeing on the daily for the last few days, okay, higher highs and higher lows, value higher, is likely to continue today as well. We are likely to get higher highs and higher lows and value higher, okay? So what would change my mind? What would get me thinking that that thesis is wrong? Very simply, if we made a lower low on the daily. So if the market at any point today gets below 52.33, that would completely remove my bullish bias for the day. And I would just be thinking this thing's going to go sideways or maybe even get a larger pullback with price. But as long as we hold the low of Friday today, as long as we don't dip below there, the market is likely to continue higher. Okay, so let's take a second. I always like at the beginning of the week to do Jim Dalton's top-down approach. Essentially, the idea is you start by zooming all the way out and looking at monthly candles, because when you're a day trader and you're focused on the intraday moves day in and day out, sometimes you can get kind of caught up in little tiny bits of momentum and not recognize what's happening with the bigger picture. So let's zoom out and see what we've got when we take a look at the market through that bigger picture. Okay, so looking at the monthly time frame. On the monthly time frame, we had a lot of excess to the upside, a lot of momentum over the last 6 months or so. That is now balancing off. We have figured out that we are balancing with time, not price. Okay? So on a monthly time frame, we are likely going sideways as long as we need to before we can break higher, much like this in here. Okay, go sideways for however many months we need to until we can finally break out, back test, and then get continuation to the upside. So on a monthly time frame, it is actually bullish because the highest probability now is that we're heading back to all-time highs. Again, not today, but on a monthly time frame, that is the target for the market, is to get up towards 53.26. Okay? Let's zoom in and take a look at the weekly time frame. So same thing here on the weekly. It is showing us the same balance that we just saw on the monthly, but in more detail. Okay, so we can see that the market rolled over, and on the weekly time frame, it got a pullback with price. Well, that pullback was all the market needed, and now we have started the momentum once again. So once again, we have higher highs and higher lows on the weekly time frame. So if we can poke above Friday's high today, which we're opening right next to, then that is a sign we are going to continue the momentum on the weekly time frame, which again targets the previous all-time highs. So it is bullish to see. Now, what would change the scenario on a weekly time frame? If we got below last week's low, which is down at 51.57. Okay, on a weekly time frame, as long as we are above there, the highest probability is that we're heading back to the all-time highs. Okay, and again, this is on the ES. And then lastly, let's just zoom in and take a look at the daily chart. So again, we can see the same thing that was happening on the monthly and happening on the weekly, but with much more detail. We can see that on a daily time frame, they liquidated the market lower. They just squeezed all the buyers they could from the last couple of months in one swift pullback, and we have been slowly but surely climbing those stairs back up ever since. Okay? So that is bullish to see. Looking at the daily, it's giving us the same information that the weekly or monthly would give us. But what else are we monitoring on the daily time frame? This channel that the market has begun to develop here. There is a trend line which starts around the highs of April 23rd, and the market has been respecting that trend line ever since. Okay? So one form of balance, one way that the market can balance using time is by creating a channel like this. If that is the case, one of two things needs to happen here as we keep retesting the channel highs again and again and again. Either the market needs to violently poke through, come back down and turn it into support, or we need a pullback, at the very least, to halfway back on the channel, if not all the way back down near the lows. Okay? So again, this morning, market looks bullish. If it can get above Friday's high, it is bullish. But we are also right then and there dancing on this trend line. And we can't ignore the fact that it could look above Friday's high and fail and come pulling back down. Okay? So now let's zoom in and we'll take a look at the market profile chart to get some more specific levels. So we are going to be opening. I mean, obviously we still have 20 minutes till we open, so who knows, we may even open with a gap up. But if we open inside the previous day's range, we will see it as a chop zone. Okay? That chop zone is basically going to be from this node right here around 52.44 up to whatever is the high in the overnight. As long as the market is grinding inside of there, it is likely to go sideways. If it breaks below, we'll call it 52.41, that is likely going to lead to a pullback to test the previous day's low. If it gets above the previous day's high, again, this is if we were to open right this minute, if it gets above the previous day's high and finds support, that is bullish for continuation higher. Okay? So the most important levels in my mind, as if the market were to open right this minute, would be 52.64, which was Friday's high, and 52.44, which is where this node, it was the fairest price to do business on Friday. It was the fairest price to do business on Thursday night. And it's a large node of time over the weekend. So they spent a lot of time playing tug of war here before they decided to take the market higher. That is an excellent place for the buyers to be waiting, for those limit orders to be layered in there for when the market comes back into it today. Okay? So I am looking for support in this area. As long as we find it, I assume we're continuing higher. But if it breaks, we need to pull back and test the previous day's low. So if we get above yesterday's high and we find support, I'll just be bullish, right? Because the monthly chart told me to be bullish to test all-time highs. The weekly chart told me to be bullish to test all-time highs. The daily chart told me we have a trend line that's sitting right here. And if we can get through it, I should be bullish for continuation higher. So getting above yesterday's high and finding support in there is bullish across the boards on every time frame. However, because of that trend line, I also must be wary of what we call a look above and fail, which would mean the market pokes above Friday's highs, spends a little time, but it can't bring in volume up there. And then it starts to pull back down into Friday's range. If that happens, you're likely to squeeze all the buyers that have been buying in this overnight. You're going to squeeze some of the buyers that were buying in the lows yesterday, and the market is likely to pull back down. If that happens, that increases the odds of a move lower. It doesn't mean we'll get it. Again, we're going to be watching for support around 44, but it just increases the odds that that's what's going to happen. And again, I just go back to that channel on the daily. Don't ignore that channel. All right. We have been trying to poke through the upper end. A failure to do so increases the odds. Look at this. Tried to poke through, tried to poke through, tried to poke through, tried to poke through, and then all the way down to the opposite end. So if they look above the previous day's high today and fail, this could be the day where we get the to the opposite end, or, this week, at some point this week. So yesterday's high, Friday's high, is going to be a very important level. We want to see the market get above it and stay above it if we are going to remain bullish. Boy, I got through that quick. So let's jump on over. We'll take a look at the NQ. The NQ has been dancing step by step with the ES. So I would describe it in a very similar type of scenario. Pushing up against a channel high. Same exact thing with the previous day's high. If it can get above and find support, it's bullish for continuation. If it fails, it likely needs a bit of a pullback with price. And the same target to the upside. Let's just quickly look at the monthly. Oh, yeah. Exactly the same. So if they can hold the momentum on the NQ today, if they can get above Friday's high and turn it into support, the target is those all-time highs in the days and weeks ahead. So zooming in to look at NQ on the market profile chart and try to get some specific levels to keep an eye on. Dude, exactly the same as the ES. So I would describe it exactly the same as the ES. Friday's point of control is right where that node of time was spent in the overnight before they won the tug of war and took the market higher. So that is your support in there. Somewhere between 18,265 and 18,2, we'll call it 40. Okay. 18,240 is that deal or no deal level. If that breaks, they are likely to head down and test the previous day's low, Friday's low. But if they can hold the support here, if they can keep the market, keep buying in these levels, they'll turn around and head higher. Same thing for the overnight high. If they get above the overnight high, they are likely to test the previous day's high. And same as the ES, they have to turn that into support. If they do, boy, it is bullish to see. Both markets are likely to chop this morning and grind for the first hour of the day. It is bullish to see that they're opening near the highs of the previous day. There's going to be people that bought puts on Friday that are forced to cover this morning. Any questions from the chat? We got Mr. Ree hanging out. Good morning to you. Debbie B in the house. Tom is here. Trevor, good morning. RP says, TD problems got me all messed up today too. Really sucks. I know. I thought I got ahead of it. I thought I signed up for the account and had my username and password already. But then when I went in this morning, none of it was working. And they told me I have to call them. Those bastards. Those bastards. I mean, I've got the market internals on, TradingView as well. So it's not the end of the world, but it's just annoying. Yeah, I got them on here. So if I have to, I can click over here and take a look. But it is not ideal, as I have spent years training my brain to recognize patterns on Thinkorswim. David G., good morning to you. Benjamin says, in all caps, Benjamin, stop yelling at me, bro. He says, hello, can I transfer your video course into French if I purchase your training? Well, it depends what you're asking. If you're asking if you're allowed to do that for yourself, of course. But if you're asking if you can buy it, turn it into French, and then sell it as your own product, well, then you'd have to reach out by email, and we'd have to work out a deal. But you're welcome to join. There's no automated way to, I don't have any AI set up to translate me in real time. But if you speak English and French, then you'll be all right. Good morning, Will. Good to see you. Jay is here. He says, thank God it's Monday and the casino is open. Frito in the house. Sergio says, how can I see you daily? If you look up at the top of the screen, there is a link in the top right corner. Piratetraders.io/join. You can join me every morning to get my insights for just $10. $10 a month. What's my email? It's ahoy@piratetraders.io. Will, good morning to you. Ship says, yeah, I'm having a hell of a time with my TD Ameritrade account. Yeah, it's weird. You would think they would have had this smoothed out. They've been working on it for like a year. They've been planning this rollover, and yet there's all these problems. And of course, I can't do anything about it now. I'm projecting my screen live to the world. So I can't be in there dealing with new passwords and stuff. But that's all right. That's okay. We're going to make it work anyway. We've got the two most important things to understand what the market is doing. First, we've got price action, which we will see here on the market profile chart. That will tell us where the market goes, how much time it spends there, and the volume profile will tell us how much volume it brings in there, how many contracts actually exchange hands, and we have the Bookmap, which will show us where the liquidity is and how it's changing over time. With those two tools alone, we should have a pretty good idea of what's going on with the market. And so I think we'll be okay. Okay, I'm making note of this liquidity up here at 52.77. It's way too early to really care about it, but what are we noticing about that liquidity so far this morning? This liquidity up here. That as price is moving up, the liquidity is getting darker and darker and darker. Generally speaking, when that happens, they want to turn that into a magnet that pushes market away. So we'll keep an eye on that as the morning progresses, particularly if we get above yesterday's high. Do they start to really layer in a lot of liquidity there? Or does it just disappear? Same thing with the liquidity sitting here at 65. Been getting darker and darker as price moves up. So you can see right here, Let me switch colors to make this a little easier to see. Okay, so you can see right here, price is going upward. What's happening to the liquidity at that level? Darker and darker and darker, right? Then price starts to go down. What happens? Lighter and lighter. It starts to disappear, right? Then market starts to go back up and darker and darker and darker once again. So when you see that pattern happening, they are trying to turn this into a level to scare the market lower. So that means two things. One, it will be hard for the market to get up there and test it. And two, if it does, if the market gets up to 65, that will likely just disappear. Poof. They don't really want to get short there. They're just trying to use it as a mechanism to scare price away. So that will likely spoof. And wouldn't that be a thing to do? To get everybody thinking there's going to be a ton of resistance right above yesterday's high. And then the second it gets there, poof, it disappears. Ding. And we squeeze all the sellers from Friday and all the sellers from this weekend. Taking out them stops. Ship says, and all the settings on Thinkorswim got changed too. Oh, don't say that. That will be very annoying. Good morning to Nap. Cool Bean says, oops, wrong chat. What did you say? Were you talking about me to other people? How rude. All right, guys, we got 6 minutes till the market opens. If you have any questions for me, let me know. We got 100 people hanging out. And so far, drum roll, 28 likes. So if you've got a minute here before the market opens to push that thumbs up, I sure would appreciate it. For those of you that are just joining, I am bullish on the day, because of the way that yesterday's market or Friday's market traded. My assumption is we still have momentum and we can continue higher. I think we're going to chop sideways this morning. That chop zone is between 52.64 and 52.44. I expect the market to go sideways in that range. I don't know how long. Maybe it'll last 10 minutes. Maybe it'll last 10 hours. I have no idea. But that is what is likely to happen. The market will grind around in here. If they can continue to hold this node right here as support around 44, I believe the highest probability is that the market will go higher. Okay. If that node breaks, I would look to test Friday's low at 33 and monitor for continuation there. What does that mean? It means if we poke below 33 and come right back up, great. No big deal. We're just going sideways. But if we broke below 33 and we get new selling, bearish for a further downside continuation. The thing I will be most interested in seeing this morning to give me an idea of what will happen for the rest of today and even the rest of this week is, can we get above yesterday's high? Can we get above Friday's high at 64? And if we do, can we stay up there? Any new buying above Friday's high is bullish for continuation. We've got the momentum and we don't fight momentum. Cool Bean says, don't forget to mention the workshop today. I have a feeling everybody who wants to sign up for the workshop has already done so by now. We had an excellent turnout this month. Best turnout we've ever had. So I'm really excited for it. It starts at 11 a.m. today. If you've been sitting on the fence and trying to decide if you're going to do it, it's literally your last chance right now to head to marketsandmind.com. and sign up for that. But if not, I'll be back here next week. Okay, this is a good question. RP says, when you start to consolidate above the previous high, what do you look for on Bookmap to confirm continuation higher? It is called flipping the order book. Okay, so there's kind of a miniature example of it right here. You can see there was resistance right here around 52.60. Okay, there was liquidity there. The market was trying to poke in and it couldn't get through. And then it finally broke through that liquidity to the upside. What happened then? Immediately, what was resistance became support. There had been sell orders layered in there. There is now buy orders layered in there. So you're looking for that, but it should be much bigger. It should be like tons of levels. So essentially the idea would be this area in here, which currently has limit sell orders sitting in the order books, the market would push through those. And then as soon as it pushes through, you start to see the buy orders in there, flipping the order book. If you see that, that is a sign they want to hold the high. And remember, they don't have to hold it to a tick. It's not like they have to be like, never go even one tick inside the previous day's range. It's just that general area. It's got to push above and then kind of just stay right in there. If it does, that is bullish on every time frame. One minute to open. The fact that the overnight high reversed exactly to a tick at the previous day's high increases the odds that we will poke above that previous day's high. And remember, every chart on earth is bullish when you get above the previous day's high. You're above all the previous candlesticks. So if they're going to keep the momentum going, they should be able to do it once they get above there. If they're going to cause shorts to cover, if they're going to bring in FOMO buyers, that's where it would happen. Above 64. All right, the market is open. No opening bell today since my TD Ameritrade is closed. Ding, 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 ding. So we are now expecting chop inside the overnight range. We're watching this node around 44, and we're watching the previous day's high. If the market is going to break one way or to other, it will break there first, and we will monitor for continuation. As long as it's in between those two, it is likely to just chop and go sideways. So we'll watch support levels, we'll watch resistance levels, we'll watch the halfback, and we'll try to get an idea of what's going on. Let's take a look at the NQ real quick. So exact same thing for the NQ. The high is weak. It's right at the overnight high. They are likely to try to get above there. If they get above the overnight high, they will almost certainly test the previous day's high at 18,349. And it's the same thing as the ES. New buying up there, bullish for continuation higher. The chop zone is between the current high at 18,337 and 18,244-ish. Okay, so we're pushing into the first potential support here around 57. I'll be looking for a bounce there. If we don't get a bounce, looking to head down and test 51. If we do, I'll be watching the halfback, which is that little white line in the middle of the range, to see if that becomes resistance. It's a chop zone. They'll chop it up. Okay, no bounce there. That is less bullish to see. Increasing the odds, we need to pull down towards 51. Looking for a bounce there. At this point, we're keeping a close eye on that halfback, that white line. So any bounce that comes back up into there, if it's resistance, if the halfback is resistance, they're going to take another push lower. If not, they'll head up for the high. Ooh, it's choppy. Cool Bean says, Charles, did you see Aurora? I did not. I saw a lot of people post about it on the internet. Willie T in the house. Good morning to you. Cool Bean says, like me, you were asleep. Yeah, I sleep at nighttime. I'm a nighttime sleeper. Arjet in the house, good morning to you. We got 144 people here. Happy to see everyone. Let's smash that like button. Let's get some thumbs up for the pirate. And by giving the thumbs up, it's not my ego that you're stroking, although technically, yes, it is. It's the algorithm, right? You're telling the YouTube algorithm, hey, this live stream is worthwhile, which tells YouTube to send more people to watch the live stream and to watch the video later, which tells Bookmap, the company, to make more content like this. You know what I mean? So if you're enjoying what you're seeing, you know, give a little love to that thumbs up button and you might get to see some more. Okay, so if we look at the volume profile, we can see that there is a very large node on one exact level here at 55. That is what we call a volume cliff. You can't really trust a volume cliff as support. They will likely need to spend some more time and bring in some more volume down there. So if we get a bounce here, I'll be looking for resistance at that halfback because that's not real support. RP says, I like watching for a test of Friday's value area here, but sucks because you can miss the move. So I assume you mean you're looking for it to touch the value area high, and that's where you'd be looking to get long. In today's specific scenario, I would see nothing wrong with that. As I said, I think support is going to be right here, if not right now. So once again, looking for a bounce here at 51. If we get it, we look to test the halfback. If not, pull back down to 44. All right, so no support there at 51. So again, the chop must continue. There are more buyers from the overnight to squeeze. So the next support is going to be right here around 44. And you say to me, but Charles, you've already said 2 potential support levels and neither of them held at all. Why should I trust you on this third one? Because this is the chop zone. This is the area where the market is likely to go sideways. And we haven't had a single bounce yet. So there's a bounce coming. Whether they want to take the market higher or they want to take the market lower, they'll spend a little time getting people long and short in this range first. So there is support waiting. Of that, I am sure. Picking the exact level is the tricky part. RP says, in your opinion, what causes the initial move down? Profit taking from the overnight? Yes, sir. That is what it is. That's why chop zones are chop zones, because a majority of the overnight traders. So on Friday, the market closed down here. Okay. This is where the market closed on Friday. This is where it opened this morning. Okay. So a majority of the traders over the weekend were net long. There had to be more longs in the market than shorts. And so what those traders are hoping is going to happen is they're hoping that that opening bell is going to ring and that the U.S. market is going to start to head higher. Now, if that happens, they have no reason to get out of their trade, right? Because it could keep going all day for all they know. But when the market opens and it doesn't go higher, each time it pulls back, it's squeezing more and more of those traders, right? There's more and more of the longs from the weekend that are giving up. And so you could call it taking profits, but really it's more like getting stopped out. You know, it's more like being emotionally taken out of the trade, which is why once you get back down near the lows, once you get back down to where we closed on Friday, probably that's where the market flips and reverses and comes back up. Because all those overnight longs are then squeezed by that point. They're all out of the market. So that's less new shorts to enter, right? And somebody was buying the market all day long on Friday down there, right? Somebody was holding that support again and again and again and again and again. And so as long as those traders from Friday's regular trading hours haven't changed their mind, they still want to be buyers, well, then this area here is a discount. They're getting it cheap compared to where it opened. So they would be waiting. So you have less sellers because you know, anyone that needs to get squeezed has already been squeezed, and you have new buyers. And so then there's tug of war, right? Because now there's going to be people who are convinced from the opening bell this morning that the market's heading lower, so they'll be shorting. And then you have buyers that are trying to buy the dip, and they'll be buying, and you'll just fucking chop for a little bit. Choppity chop, chop, chop. Until one side or the other wins and breaks the market away. They're all just speculating and reacting to each other's reactions. That is the auction process. Buyers are forced into sellers. Sellers are forced into buyers. And then we measure tempo and volume to understand how much business is there. Again, I don't like this low. It's acting as support, but I don't trust it because it's too exact. They need one more little push to the downside, in my humble opinion. Ken says, have you talked Q yet today? Sorry, late joiner. Ken? Bro, don't be late. No, I'm just kidding. Yeah, it's fine. The NQ is doing exactly the same thing as the ES. So it's, I would say, nothing different between the two. As a matter of fact, you're testing that pivotal support right now on the NQ here around 18,245-ish. That's what they got to hold to keep the chop going. Okay? They've got a weak high. They've got a magnet pulling on price to the upside. All they need to do is start to bring in some buyers, and they'll be able to come right back up. So if they get below, we'll call it, 41, 42 area, they're likely going to get a pullback. But for now, the buyers should be waiting. On the Q. Tago says 52.46.25 is the previous settling price. Must see a bounce there. Must is a strong word, but that is a good area for buyers to be waiting. They were happy to go long in here on Friday. What has changed? Did something fundamentally change about the market over the weekend? Did we get some crazy news that changed everyone's mind? Nope. So if there were buyers there on Friday, they should be there again today. Mojo. Mojo in the house. Do you like the ES over the NQ? Yes, sir, I do. It's just a personal opinion. When it comes to day trading, I find the NQ to be too volatile. I love tech as a long-term investment, right? You know, as a retirement account investment. But for day trading, I prefer the ES. It just moves in a much more repeatable type of fashion and with less volatility. So if I'm just staring at one chart all day, every day, trying to become a master of the chart, it's easier to read the ES than the Q. But that's just me. If you guys like the Q, I would not judge you. Percy says, good morning, Charles and all. Can you please take a look at GameStop? Meme stocks are back. The same one? The same meme stock is back. Oh boy, look at that gap up. Well, keep in mind, I am not a meme stock trader, so I have no edge here, right? I haven't spent years of my life becoming a master of this type of thing. I don't know what the heck that trend line is doing. So I don't really have any edge. To me, it looks like a channel. And it looks like he just broke out. So what I would be thinking if I was dumb enough to trade meme stocks is I'd be thinking, let them come back and fill the gap from Friday and then buy Friday's high, because that would be reliable. Right now, you're just gambling. You're just chasing price. Huge gap up, tons of momentum. Everyone's going long. You're chasing price. But oh, how quickly that price can come right back down when people are chasing. So I would feel more comfortable if I wanted to buy GameStop waiting for that gap fill where I'm also back testing that channel. You know what I mean? And if I found support in there, well then, sure. Look for continuation. Jesus Christ. Yeah, it's already made a fucking 55% move just today with the gap up. That is gnarly, man. Frito says, stop nearly to a tick while I refilled my coffee. Well, would it have made any difference if you weren't refilling your coffee? It shouldn't have. It should have been a set and forget it no matter what. Nap says, strong selling tail. Are you talking about today? We don't have one yet. We're still in the first period. If you're talking about taper at the low, yes, it is good taper. But a selling tail is about time. Okay. So as far as chop zones are concerned, we've just found support. So the highest probability is that we're going to head back up to test the halfback at 52.56. What happens there will give us insights moving forward. If it's resistance, well, then we look for another poke to the downside. If we pass right through the halfback, it increases the odds we're heading up to test the week high. Oh, so choppy. Chopping broccoli. Nap says, need to wait for B period. Yes, sir. So a buying or a selling tail shows us how much time the market spent in a certain area. So we can see the market didn't spend very much time down here and we had good excess. The market didn't spend very much time up here and we had good excess. So that was a good high and a good low. And since we made the high, we've stayed below it. And since we made the low, we've stayed above it. And so that makes sense because we had good excess there. So right now in the A period, we're still in the first 30 minutes. It's just too short of a time period to measure. But if the B were to print right now and the market were to work its way higher, then you'd have a good tail at the low. Stephen, the question I get all the time, boy, this is such a popular question. Is there any value or significance to overnight single prints? So the answer is yes and no. Are they something you should pay attention to? Yes. Are they something you should obsess over? Absolutely not, right? Regular trading hour single prints are something you should pay a lot of attention to. You could even look to put in orders based on that. So let's say these were single prints from a regular trading hour. You could go short on the way down and look to take profits at the base of those single prints, as there would be a high probability you're going to fill them. Or you could be looking to go long if you're flat at the base of those single prints with a tighter stop for a bigger move to the upside, because you're assuming that's where the buyers are going to step in. So single prints are very important during the regular trading hours, but during the overnight, I would never put an order in purely because of them. But there's something to be aware of, you know, that there was a quick move through that price level and we're likely to pass through it again. But I wouldn't put too much credence to overnight singles. Griff says the K, L, and M period lows are weak from Friday. You're right. I didn't even mark those. Oh, that's because I wasn't trading in the afternoon. Do I care? Of course I care. Not at this moment. Not as long as we are above the overnight low. But if we get below there, yeah, those will matter. That's the thing about a chop zone. When the market's in a chop zone, all I think is chop. All I worry about is the zone where we're likely to go sideways. Once we break out one way or the other, then I start worrying about weakness below or above. But inside the chop zone, I just want to stay obsessed with price and time, support and resistance, because I need to be very focused as they're changing second by second. Oh, gather round, traders, wherever you roam, and admit that the price is in a chop zone. Soon enough, you'll be worked to the bone, getting stopped out again and again. Reversion to the mean. Are you best? No. Because the market's in a chop zone. Ike says, what do you mean a good tail? Ike, you got to sign up for the workshop. It starts in an hour. Literally 1 hour from now. I go over all of it in detail. It's just about understanding where business changes. Where does the market run out of buyers? Where does the market run out of sellers? By recognizing where those changes take place, you can guess what's coming next. So by having a good tail at the high yesterday, you could say there's a chance we're going lower. By having a good tail at the low, you could say there's a chance we're going higher. It's just one single data point to take into account. So for example, we do not have a good tail at the high right now because we have a weak reference there. The market reversed one tick away from where the overnight reversed and the previous day reversed. So that's not a good tail up there. So that increases the odds that at some point the market's coming back to pass through that level. Now, does it have to do it right now here today? No, it doesn't, but it is one thing to take into account. Wouldn't want to be overly bearish with a weak high up there. Whereas the low is a good low. So now that we've printed the B period, we have good excess and good taper at that low. So we don't have to go any lower now. We've made a good low. If we get to the half back and we start to sell off, well then fuck it. Yeah, they're coming back for the low. But if we get to the half back and they don't, boy, you can be much more bullish because they made a good low. marketsandmind.com. The workshop starts in 1 hour. But between now and then, I'm going to go hang out with the brigade for a half an hour. So if you are a member of the Piratetraders Brigade, head on over to the live stream. I will see you there. If you're not, what on earth is stopping you? You could head to piratetraders.io/join. And for just $10 a month, you could hear my opinion every morning of what I think is happening and what I'm watching and why. Thank you very much, and we will see you next Monday. Bookmap community, goodbye. Oh, as far as for the rest of the day today, go back and watch the first 5 minutes. I already laid it out. It's a chop zone inside this overnight range. If they get above yesterday's high, if they get above 64 and they get new buying, it is extremely bullish to me for continuation higher. However, I am cautious because there's a very good chance it'll look above and fail. And that is because of a trend line on the daily time frame. So on the daily time frame, we have been just making sweet, sweet love to this trend line all last week. The last time we did that and we couldn't break above, the market had to pull all the way back down. So we are set up for that same thing here today. If they look above Friday's high and they don't get new buying up there, it will likely lead to a bigger pullback over the week ahead. So if they hold Friday's high, it's bullish for continuation. If not, it's bearish. Same thing if we break the overnight low, that is just straight up bearish. So if we get below 40 and we get new selling, it's going down. It's going downtown. All right, with that, I will say goodbye. See you guys next week.